Hello. The bears are firmly in charge this week, with oil and curve gas and power contracts losing around 5% compared to last week. So let's have a look at the week's actions in some more detail. Front month Brent traded relatively flat on Monday and closed just $0.1 per barrel higher day on day. Prices then started to ease on Tuesday. Chinese economic data provided further evidence of slowing demand, as well as an announcement by President Trump which suggested progress had been made with Iran, which reduced concerns that tension in the Middle East would lead to conflict. Wednesday's session was bearish, and despite the weekly EIA report showing a drop in crude inventories, it also showed an increase for motor gasoline, which implies demand through the driving season may be weaker than initially forecast. As a result, Brent fell $2.50 per barrel. Brent then continued to slide on Thursday as Russian oil production was restored after output dropped to a multi-year low last month due to quality control issues with pipeline exports. Last night, Brent closed at $61.93 per barrel, down just shy of $5 per barrel compared to last Friday.
Prompt prices were supported on Monday by low renewable generation, whilst the curve was directed lower by the wider fuels market. An oversupply system and lower demand forced contracts lower throughout Tuesday's session. Day ahead closed nearly 6.5 pence per firm lower day on day. Heavy losses were also seen on the near curve, with August losing 3.5 pence per firm. Prices continued to fall on Wednesday. Lower oil and a well-supplied system were the main driving factors. Contracts were mixed on Thursday. Prompt and near-term contracts found some support as the system moved into an undersupplied position. A number of unplanned outages restricted Norwegian imports. Curve contracts took their direction from weaker oil, and most contracts lost around 0.8 pence per firm. All contracts closed last night lower than last Friday, the biggest move being on the near term. September 19 lost 6.25 pence per firm, whilst contracts from summer 20 onwards lost around 2.5 pence per firm.
As with gas, power prompt prices were supported by weak renewable generation, which stood at just 0.8 gigawatts. Forecasts suggested it would rise to 4 gig by the end of the week. However, longer dated contracts took their direction from falling gas. Brent, coal, carbon and gas prices all traded lower on Tuesday, which pressured power prices lower too. An increase in wind generation gave some relief to prompt prices also. It was another bearish day on Wednesday, with wind generation increasing once again. Lower gas prices also pressured the curve thanks to higher forecasts of LNG supply towards the end of the summer. The increase comes as demand in Asia declines. Power prices tracked their gas counterparts on Thursday. Prices were also pressured lower by falling carbon prices, and this was despite a rise in coal. All contracts closed lower last night by around 5%. You can download the full version of this report from our website. Thanks for watching, and we'll see you next week.